Hi there, folks. This is Sean Broderick for the Oxford Club. I'm in San Francisco, and I'm speaking to Bridget Freese. She's the Director of Investor Relations for Couer Mining, great silver producer. And they have a lot of interesting things going on, and Bridget's going to give us the scoop on what Couer is up to. Bridget, could you please speak to my subscribers?
Sure, I'd be happy to. So Couer Mining, we're the largest silver producer in the U.S. We're a pretty significant producer of gold. We're looking at doing about 18 to 19.1 million ounces of silver in 2013 and 250 to 258,000 ounces of gold. So that puts our revenue split at about 55% silver, 45% gold, which is a pretty big shift from just a few years ago. We used to be primarily a silver producer, and we've really beefed up the gold side. But we do have a couple things in transition and on the docket for the coming year. One would be, I think the largest catalyst is the potential to move forward with constructing our La Preciosa project. It's a gold and silver project in the Durango state of Mexico. We purchased it in April of this year. It came under our purview from the acquisition of Orco Silver. We're in the midst of doing a feasibility stage project. We're looking to really improve the returns such that next year, if we decide to move forward, we would be pretty confident with a project that we think would exceed our cost of capital. So I think that's definitely the biggest source of growth in the next several years, but something that we're going to be pretty cautious proceeding with.
Okay. Well, one thing all the companies that I've been speaking to have been wrestling with is they can't control the price of the metal.
Yeah.
But what your company is doing is actually emphasizing cost control. So could you maybe speak to that a little bit?
Yeah. I think in the last several years, especially leading up to 2011 when metal prices were so high, there was a big focus on how to achieve more growth, how to grow. And at Couer Mining, we're not looking to be the largest silver producer, the largest gold producer. Really what we're using as our measuring stick is returns on capital and managing our cost structure. Because you're right, we don't have a crystal ball that says where metal prices are going. This is a cyclical industry. So, two things, focusing on our balance sheet and making sure that, we're not strapped for cash, and then trying to figure out ways where we can bring down our cost structure. We've already had some pretty decent success stories in 2013 on that front in terms of trying to optimize our assets and kind of take advantage of some low-hanging fruit, whether that's lowering our contract services or generating greater efficiencies in the maintenance systems, better procurement, things like that. We've really brought down our costs at our Kensington gold mine in Alaska, and we think there's some runway to continue doing that. And then we just recently, the week before last, announced the formation of a new subsidiary, Couer Capital, which will be a streaming and royalty company. And we think that this will nicely complement our producing assets and generate some stable, higher margin capital or cash flow with minimal capital. So really that's our focus is how do we drive returns? How do we bring down our costs? We don't spend a lot of time worrying about silver and gold prices. We really look internally to try to drive those returns.
Okay, so we'll be watching you folks next year to see if you proceed with a new project and how that heads along. And also I think this fact that you have a new royalty company starting up, that's actually quite exciting. And if someone owned your stock, they could always look forward to that spinning out a few years down the road as well.
Yes, we would like to generate a little bit more scale there. Right now, assuming that the acquisition of Global Royalty Corp closes, which is expected in the next few weeks, we're looking at about $15 million in free cash flow run rate. We think we can grow that to maybe $50 million in the next 5 years, and then at that point, that's something that we would look to monetize. And I agree, I think that would be a pretty attractive opportunity for our stockholders, given how royalty companies tend to trade. We think that's a great source of value.
Okay, well, great. That about wraps it up for me. Is there anything you'd like to add?
No, thanks for having me on.
All right. Thanks for tuning in, folks, and I'll have more stuff for you from San Francisco.